Hi, in today's discussion relating to financial accounting, we will be looking at measuring business transactions, in particular, the trial balance, journal entries, and posting to the general ledger. First, we will be looking at Objective 5 for Chapter 2, preparing a trial balance and describing the value and limitations of a trial balance. The trial balance, if you'll recall, going back to the first semester, is basically prepared at the end of each fiscal period, at the very least, the end of each month. The trial balance takes all the accounts in the general ledger and ensures that the debits of those accounts equal the credits. The steps in preparing the trial balance include listing all the accounts in the general ledger and their related balances. If you look on page 108 in your textbook, you will see an illustration of the trial balance. So what we first do is we take all of those accounts from the ledger and their related balances, and we put them in the appropriate columns, the debit or the credit columns, depending upon their balance at the end of that fiscal period. We then take the columns, each column, the debit column, and add it up or foot it, and the credit column, and add that up or foot it, and then compare the totals of the two columns. The totals should obviously equal. The trial balance, if you recall, simply proves that debits equal credits. It does not prove that the transactions were actually entered properly, analyzed properly, or recorded properly. It just simply proves that the debits equal the credits. The steps in preparing a trial balance, if you recall, include first, to list all the accounts in the general ledger in the order the accounts are listed in our chart of accounts. If you recall, the chart of accounts is going to be listed first based on your assets, then liabilities, then stockholders' equity, then revenue, then expenses. With regard to our assets are going to be listed in liquidity order, meaning how quickly they can be converted to cash. If there are multiple assets in the same category, they would be listed in alphabetical order. So if you have multiple accounts receivable accounts, you would list those in alphabetical order. When you get to the liabilities are going to be listed in terms of how quickly they are repaid. So the liabilities with the shortest repayment period are going to be listed first, and those with the longest repayment period will be listed last. Our stockholders' equity, we first list our contributed capital, then our retained earnings, then we have our categories of revenue, and then we have our categories of expenses. Typically our expenses, we list those typically in alphabetical order. After we've listed all the accounts from the ledger, we then record the account balances for each account. We list our debit balances in the left column and the credit balances in the right column. Again, then we total and foot each column, which basically just means add them all up, add up all the debits, add up all the credits. Then we compare the two columns, and they should be equal. If they're not equal, we know we've made a mistake and we need to go back and recheck our posting and our journal entries. So what are some common mistakes that we see on the trial balance? Some common mistakes that can cause an imbalance between the debits and the credits are if you add up the columns incorrectly, if you record debits as credits or vice versa, and if you transpose numbers, meaning you reverse the order of the numbers. Some common errors that do not cause an imbalance in the trial balance, meaning the balance at the end of the columns, the debits may equal the credits, but there are still errors, are if the transactions were entered twice, if both debits and credits are incorrect but equal, if the wrong account was debited or credited within the same element of the accounting equation. So for instance, perhaps you debited prepaid insurance when you should have debited supplies. That would cause the account balances for those each of those accounts to be incorrect, but it would not cause the trial balance amount to be incorrect. And those are the common mistakes. Some common things to keep in mind when you're preparing your trial balance. First, the dollar signs for the first and last numbers in a column you should use dollar signs for the first and last numbers in the columns on the trial balance. You should not use dollar signs in the journals and the ledgers. We should omit commas and decimals when using ruled columns, and we should use commas and decimals on unruled paper. And you can see an illustration again on page 109 in your textbook. Now let's just spend a few minutes talking about recording journal entries and posting transactions. Objective 6 is to look at how we record transactions in the general journal, and Objective 7 is to post transactions from the general journal to the general ledger. So let's look at the general journal. Going back again and reflecting on the first semester, our general journal is our book of original record. This is where we record our transactions when they take place. We record them, of course, in chronological order. And there should be separate entries for all parts of each transaction. So for each, the debit and credit parts, there should be a separate component to the entry. And then we should record our entries in the journal, and that is called journalizing. There are, in many businesses, they use things called special journals. These are journals that use an abbreviated format for the journalizing process. They include such items as a CAS journal, a sales journal, and a purchases journal. And they're used simply to make the processes that are routine easier and quicker. So any entries that are entered into, say for instance, a cash journal, we know is going to increase or decrease our cash account. So it's just a quicker process. We have actually not used any special journals. It's more important that you understand the concepts associated with the general journal, and they're transferable to the special journals. I just want to make sure that you know that these special journals do exist in many businesses. Then we have the ledger. The ledger is an account form that shows the ongoing balance of our accounts. If you recall, we take the information from our general journal and we post it to the ledger. In the ledger, this is where we show the ongoing balance updates for each journal entry. So if a journal entry has a positive impact, we show the ending balance after that positive impact. If it has a negative impact on that account, we show the ending balance after that negative impact as well. So the posting transfers the journal entry from the journal to the ledger. And you can see an example of that on page 112 in your book. And that concludes our notes for Chapter 2, Measuring Business Transactions. Please complete the concept review questions for Objectives 5, 6, and 7 of Chapter 2 and submit your responses using Google. Please also remember to print or copy your answers to your questions for review and discussion in class. Thanks, and have a great day.